All right, everyone. Good morning and good afternoon. Thanks for joining our webinar, Fraud and AML Executive Insights for 2026. If you just want to go to the next slide there. Just have some quick housekeeping items for us here, and then we'll introduce our panel. This webinar will be recorded, and a link to the recording will be sent to everyone in attendance after the session. Please be sure to submit your questions to the panel throughout the presentation. Our last 10 minutes of the webinar will go through as many of those questions as time allows. And also, just to note, you'll see a QR code on your screen later in the presentation. This code is associated to the report that we'll be discussing throughout our webinar. And now I'll hand it over to our moderator, Yinglian. Oh, I think you're just on mute there, Yinglian.
Thank you, Joshua. It's my great pleasure and to be joined by a group of distinguished panelists with me together to discuss this executive report insights for 2027. And first of all, we will have a round of introduction of ourselves. I'll start with myself. I'm Yinglian Xie. I'm the CEO, co-founder of DataVisor. For those of you who don't know about DataVisor, DataVisor is an end-to-end fraud risk platform powered by advanced machine learning, AI, to help organizations and financial institutions to combat a variety of different fraud and financial crimes. Now I'll start with the remaining of our panelists. Brian.
All right, thank you, Yinglian, and hello, everyone. Brian Hughes, I'm an advisor to DataVisor, to the Boston Consulting Group, and also NICA Partners. And I serve on the board of directors at Affirm currently. Most of my fraud information comes from these advisory roles, but also previously I was the chief risk officer at Discover, where I remediated 2 consent orders for anti-money laundering and also built the fraud capability for the digital banks. So very happy to be here discussing my favorite topic. And I'll pass it on.
David.
Hi there, I'm David Barnhardtt. I'm a strategic advisor for Datos Insights. I'm on the fraud side of the practice. I've been in the fraud industry for 30 plus years. My career spans law enforcement, financial institutions, and solution providers. Most notably, I was the emerging risk executive at Bank of America, strategy over online fraud, ring analysis, and employee fraud. And then I moved into solution providers. I was the chief experience officer for Gaiac Systems until we were acquired by Refinitiv. And before joining Datos, I was the head of fraud at a prepaid benefits provider. And I will turn it over now to Ted.
Okay. Hi, I'm Ted Josephson, and I've been in banking for the bulk of my career. We won't go into how long that is, but it's quite a while. And I've got 8 years, the joy of being focused on fraud community at Synchrony Financial, and the fun of putting together real-time fraud capabilities, controls, and ways to protect our customers and the institution from the bad guys out there.
Great. So with this, we're going to start our panel. First of all, from the panel, we will first go over the 5 key insights from our executive survey to produce the 2026 report. And then we will spend about 8 minutes each, very concise format, to discuss each of the topic. At the end of the discussion, we will leave about 10 minutes Q&A for everybody to ask questions. So with that set up, I'm going to kick off and to start talking about the 5, discuss a little bit of these 5 key insights first. For this survey, we actually surveyed comprehensively, predominantly on the fraud and AML leadership level. And hopefully this provides a lot of insights for you to think about what kind of decisions you need to make for 2026. And I'll start talking about brief introduction for each of that before we start our conversation. First of all, with the AI being talked about every single day, and we find the leaderships are talking about the AI paradox, meaning we really are worried and concerned about AI-driven attacks. At the same time, we have like low label readiness and low readiness in general across organizations. And here you can see 74% of the risk leaders identify AI-driven leader as their top threat. And the majority admit they lack the overall infrastructure and to build effective defenses. And second, we see also talking about the data infrastructure, we saw the agility depth of data silos across fraud and AML, while both fraud and AML are top topics that keep us kind of awake, kind of at night. At the same time, we worry about the fragmentation, and that remains a critical bottleneck for these teams. 81% of the firms are actively considering or pursuing a more unified fraud AML approach where we can share insights, share data, and collaborate more effectively. At the same time, and nearly half of those leaders cite the data silos remain primary challenge for everyone. And third topic is as we are moving very fast toward real-time payments and per consumer demands and business demands, and we continue to struggle with being able to make really real-time decisions to protect fraud. So we're going to dive deep into the topic of how to handle the consumer demand versus the practical challenges we face every day. And the next one is about, again, coming back to the leverage of AI. A few years back, we have been mostly talking about machine learning models and how the models can help us with detection. And with AI, Gen AI, AI agent, we started seeing the focus of AI have gradually shifted beyond detection to investigation assistance as well. The concept of AI co-pilot helping us to prioritize entity linking, triage, investigation, case review to manage the rising alert volumes is another new area we can generate ROI. And talking about finally the ROI, the metrics, we are also seeing the final insight is the concept of modern scorecard. It means we are going beyond just fraud loss as a single metric to talk about fraud and financial crimes. We're really looking at a more holistic set of metrics, and including customer friction and operational metrics and growth measures, a variety of different type of metrics to help us evaluate the effectiveness of fraud and AML teams. So this is a context for us. And again, for those of you who are interested in reading the detailed report, you can have the full report downloaded at this QR code. And now let's start with discussing the topics that we talk about. And the number one is probably we are mostly interested in the AI paradox. And meaning we're seeing attackers move by days in leveraging AI, yet fraud teams and leaderships have to move deliberately of leveraging technology to battle these like new rising kind of threat, and how we are dealing with how to think about this problem. And I want to start with Ted. You're operational, you're actively in the field, actively battling these type of frauds, and what you are seeing from the organization perspective and how we are looking at this AI paradox problem.
Well, thanks. One of the things I'm seeing is that, from an attack vector standpoint, it's mostly, from what I'm hearing, is scale and sophistication of the same old, same old. I'm seeing a lot more, but it's enabled and made mass market in the dark web for a much greater group of people. But we're seeing the same type of things, and that's the struggle. Suddenly we're getting much larger attacks much more regularly. And so the operational challenge is, how do you handle that? And it's throwing bodies at it and throwing additional data science people for things that are clean PII that's coming in, checking off all the boxes because they've been pulling in the information from scam forums that Facebook puts out there. Yes, Facebook, we all know, does that. That's the challenge. And so within my own company and from what I'm hearing from others, we're trying to take the AI tools that we know could be very effective and looking at the attacks that we're getting, the same old, and reducing the complexity of working them. But I have to put PII into it. And there's this concern from a model risk management standpoint, regulatory standpoint, that AI is going to go rogue with the PII that we're putting into it. So we need really good high level, not just operational controls, but executive faith that those controls are going to work, and compliance team controls that they believe it's going to work. So I think the industry is making real progress in it. I know within my own company, that we're close, if not there, and I hear that from a bunch of others, that being able to do it, but there's still nascent because we have to obey the rules and do the right thing.
Definitely, I can see kind of the challenge with dealing with kind of the data, the PI information. Brian, when you talk with strategic kind of leadership across different organizations and banks, and what you're seeing everybody is thinking about, and what's a concern for everyone, and is there any consensus among the group what to do?
Well, just to kind of double click on a couple of things that Ted mentioned. If you look at the specific kinds of attacks right now that AI is fueling or is making better, falsified credentials are probably the first, and both the consumer side and the business side, falsification of ID docs, also sort of passing some of the static selfie document verification. So the first place to look then is if you are relying on document verification, making sure that you are working with one of the best of breed, because it's really separated, I think, the field in terms of who does it well and who doesn't, and the quality of the technology that's there. So that's one. It's just the falsification around the ID docs. The second type of attack, three types I'm going to go through. The second type is just account takeover through stolen credentials. AI is allowing people to create bank lookalike websites that are, down to the pixel, identical to what you might see in your bank. That's new, I think, to a lot of consumers. So the old sort of looking for a misspelling in an email or a site that looked off, that doesn't cut it anymore. And so there are a lot more stolen credentials. So when you think about your authentication process, the way you're leveraging device intelligence, behavioral analytics, pass keys, the like, that's an area that I think I see a lot of companies investing and reinvesting in, is when it comes back to making sure that even real credentials in the hands of a fraudster can be blocked. And then lastly, the scam activity, I think, is on the rise, and I think is poised to get much worse, just in terms of the sophistication of the scheme to trick people or to trick companies. So in terms of defenses, I already mentioned, document verification, making sure that is up to snuff, authentication as well. The other thing to look at is just sort of proactively getting intelligence and testing. So we see people proactively testing their defenses, some using fraud red teams. Also, a lot more in the way of customer education on scams. And then the other thing is starting to use unsupervised machine learning and models to detect anomalous activity before it becomes trouble. So unsupervised learning and the application stream to find irregularities there, and unsupervised as well on the transaction side to find irregularities before they turn into losses, to be able to detect reconnaissance or to be able to detect new patterns. So I think that the general theme here is an upgrade to the data sources you're using, but also a much more proactive approach to testing your own defenses and to try to detect potentially risky activity inside your business.
Yeah, I like what you're talking about. There's a lot of comprehensive data we can use and different type of approaches, holistic way of looking at unsupervised and approach of detecting anomalies. And David, I recall Datos have kind of a similar kind of report and study. And so are you seeing the similar kind of trend and concerns from everyone?
Oh, just the fact that you put the AI paradox, that's a phrase that I've used across several different pieces of research. And it's, AI is a friend and AI is a foe. And back to Ted's point, it is so commoditized now that you can get, the blue collar fraudster who used to couldn't afford really sophisticated tools can now use the services of language translators. They can clean up their phishing emails and their phishing text. It's made the art of committing fraud a lot easier. And that in turn does, in fact, scare the fraud executives to death, because back to Ted's point, you don't have an infinite checkbook where you can, just hire and throw bodies to work the incremental alerts that are coming in. So what we're seeing and what we're talking to institutions about is, where are you starting with the use of AI? Because all of those things that he brought up earlier about model risk governance and what are you putting into this thing? Is it agentic? Is it generative? What are the laws and the rules and the regulations to use it? But where can we start? I look at it as eating an elephant. You don't want to eat it. You don't eat an elephant in one bite, but you eat that elephant bite by bite. And they're looking at, okay, what's the first bite? Is it co-pilots to help my agents be able to triage things a lot quicker and to make decisions with more accuracy and confidence? Is it understanding the threats before they become a significant fraud trend and actually deploying a strategy prior to any losses occurring? But right now I think we're at this stage where more institutions are starting to figure out what the rules of engagement are on their side and how to deploy those tools to try to thwart off some of these attacks. As Brian mentioned earlier, they're coming from all angles, right? They're coming from the cyber side, the credential testing, the PIN testing, the card testing. They're coming in with really good synthetic identities, really good application, applying for applications. So, the attack is certainly up, but it's the balance in the transformation balance, I should say, is being able to insert the proper tool to combat those traits.
Yeah, so talking about the tools, talking about data, I want to come to the next topic. It's kind of a perfect segue. And from the survey, we actually find strong overlap between fraud and AML, kind of the need of leveraging kind of a common data infrastructure of tools. From the reality perspective, that is still, there's a lot of desire there, but we're a little bit far from there. And when we talk about the concept of FRAML, what does FRAML really mean? And certainly we can think of organizational kind of consolidation, but that probably is not happening, as we probably are seeing kind of for various reasons. And so there's a lot of, I would say, thoughts and deliberation about being able to benefit from the collaboration, maybe from the data layer or infrastructure layer. I'll start with you this time, kind of David. And when we talk about fraud and AML, I know Datos study both topics extensively. And maybe you can comment on what does FRAML means to most of organizations.
Yeah, so there are a few that have taken on the exercise, the monolithic task, whatever you want to call it, of combining fraud and AML. And that's really tough to manage because you've got really two shops that are working at different ends of the spectrum, right? Fraud is dealing in minutes, seconds, and maybe a day. AML is working in days, weeks, and months, compiling investigations. However, the common denominator with those two groups is they use the same data. A lot of the same data, what may not be fraud to fraud is a significant ring to AML and vice versa. So when we talk convergence, I think what we see mostly are banks that are willing to be a good partner. And I'll go a step further and even throw cyber in there because we've heard of fraud and cyber getting together, right? And there's a lot of institutions that are looking at that. And we've even had some internal meetings with our fraud council where we broach this topic. And while there are people in the room that do have a functioning model, right, pulling two groups together and combining resources, a lot of the banks in the room chose to say, no, look, I'll be a good partner. I'll be a good neighbor. We'll share information. We'll work across the aisle. But we feel this way with not only cyber, but AML as well, because, it's more of, I don't want to get wrapped up in whatever the priority may be of the leadership. So in this case, what we typically see is good, strong relationships with the two, even to the point of maybe sharing a platform to bring costs down, right? So if you have a shared platform internally, you're not losing anything in translation. You're not creating a new silo. You can see what was done by our fraud team as it goes over for further investigation with AML. And everybody's kind of playing off the same playbook. But, there's still a lot of work to do there. There's a lot of people thinking, well, we can amortize the cost of this and probably get some benefit and remove some silos if we do combine. But it's still a work in progress. But a lot of times when some of these conversations come up, you start to see a lot of friction because, sometimes the groups just don't want to merge.
Yeah, and yeah, I can see the collaboration kind of trend is there, how to effectively leverage that the two teams share some similar missions, but each with their own focus. So Ted, coming to you as a fraud leader, how you seeing the collaboration and is going toward with, for example, your peers and leading the compliance tasks?
Yeah. Well, it's funny because I've heard reference, and I don't think this is true, but there's a frenemy relationship with your compliance team and your BSA AML team, and I think that's way overstated. But I think that's part of the reason why FRAML hasn't worked is because when you have two groups, they have a generally conceptually, we want to stop bad guys doing stuff. But one has that compliance overlay. I've got to make the regulators happy in doing it. So there's all of that work. That's a primary goal. And you've got the other group that's I've got to stop it in milliseconds. Trying to bring all that together in a unified way and make them all fit together, I think is not rational. However, we use the same freaking data. So to David's part, but we generally tend to have disparate platforms. So I think what's really needed, the idea of a consolidated platform between fraud and BSA AML, if something like that, DataVisor offers that. I think there's some real logic to that. You just build it once and everybody gets to play with it. Or the other approach is that we all have the same data needs. We should make sure that when we do it, I'm not building a specialized thing for fraud, and BSA AML team is building their thing and they're living in different worlds. No, put them at least in a usable data lake or a usable data warehouse. But honestly, it should be a scalable type of queryable, data source. So, me, we currently use DataVisor for our fraud monitoring and real-time stuff. I think there is a value in having a consolidated platform between the teams.
I think infrastructure level is where you comment and definitely can immediately benefit everyone without turning organizations in different kind of ways. And then what was being used, kind of what being organized today. Brian, do you see this topic coming up in strategic discussions with leadership of fraud and AML collaborations among teams and the data silo topic?
I do. I see a lot of companies talking about it. The current regulatory context where it looks like the regulators are backing off a bit. I think a lot of risk organizations are being asked to take a hard look at their cost base. And I think, to senior management, a lot of times it makes sense to put these teams together because, as Ted just said, they're both about fighting bad guys. So why wouldn't they come together? I agree, though, that the synergies really stop at the infrastructure data sharing layer. Maybe one other opportunity to throw in there would be cross training of investigators. I've seen that succeed because you get lumpy investigation volumes often across, and you can get some coverage there. But I think it is counterproductive. I think to consolidate the strategy teams and the teams are sort of responsible for other things. The other thing you can consolidate maybe sometimes the model building, which is often consolidated. But I think bringing the strategy teams together, jam the investigator teams together usually doesn't work.
Yeah, I see we are reaching kind of a lot of common consistency here is talking about the sharing of the data with the consolidated infrastructure, the best practice, maybe some of consistent also the approach like investigations across different teams. So those are all great advices. Now let's move on to the next topic, and which is how to support and protect real-time payment. And that's also been a hot topic lately, being talked about for a few years. And I do think this is still a challenge because that's something we still are talking about. How do we fight real-time fraud? And as real-time payment continue to get adoption, the complexities definitely over there. We need to make decisions really fast when we're talking about real time. And I want to take everybody's kind of take on how to balance kind of the consumer demand versus the protection of customers. And maybe start with David, from this perspective, what you're seeing?
Well, we actually, I wrote a report, our flagship report on real-time payments, but we did it a little differently and said, what is the biggest concerns in the next 3 years, right? As it pertains to real-time payments. And we talked to roughly 160 fraud executives over 6 countries. And, there's a couple of ways that real-time payments are breaking down. And really the biggest threat is in fact still scams. This whole social engineering aspect, this trickery. And, when we looked at the age groups and we asked those execs, what age groups are you most worried about? Who are the highest risk? Obviously 65 and older unanimously was number 1. But the interesting piece in the second group, which was a little surprising, was people 18 to 25 years old. Because of their social presence, because they're, pretty much living their life vicariously through a phone. And they feel as if they're not as wily and able to detect or perceive when something is not correct. And, that is a significant at-risk population. But as we dug a little deeper into this, there was a trend that started to emerge that was very interesting. And this was unanimous, and this is rather taboo to say this, but unanimously, the fraud execs believe that consumers don't really need real-time payments. What about near real-time? And I'll kind of go into what their thinking was, and really the basis of their conclusions. But their idea is, if I'm sending money to you, if you get a notification saying, hey, David has sent you $25, you're going to be like, okay, great. I see that David sent me this and I'm not going to worry about it. He's paid me. Today, companies that process these real-time payments send them instantaneously, and they're irrevocable. What the fraud execs are saying is, we have a lot of mandates, right? We want to be able to protect consumers from scams. We want to be able to bring in additional signal data. We want to bring in data to make the best informed decision possible. We can't do that in milliseconds. Give us a minute. Give us 2 minutes. Give us 5 minutes. We're going to get the payment out. But let us slow the payments down in order to do a better job at protecting the consumer. And it was interesting. They didn't mention their losses. This was all about protecting those populations, and again, specifically the 18 to 25s, because they're effectively going to do more transactions. But they were saying, the fact that we have real-time payments is a competitive feature amongst transmission companies or payment senders, and that consumers really probably wouldn't care if it was near real time, but they're just asking for a slowdown in speed in order to bring in the appropriate level of signal information, strategy information, give those solutions time to populate the best decision possible so that they can do their job at protecting the consumer.
Well, that's interesting. So we talk about the need of real time, but from a fraud perspective, we really don't think we need that kind of real time payments, kind of near real time. Brian, what do you think? What do you see?
Well, I like David's answer, because David's answer did not include, I think, an emphasis on customer education or an emphasis on talking to the customer before they commit a transaction that you think might be risky. And I think probably a good reason for that is because I think what we're seeing is banks that have implemented, customer speed bumps, or, I think some company was even having customers sign affidavit, click a button that says, I realize this could be a fraudulent payment. Realize that those really don't work all that well. Customers cruise right through the speed bumps, oftentimes because they're very well coached. And even if they do check a box or clear a warning or something like that, they still want their money back if they get scammed. And so I really do think it's about employing, on behalf of the payments network or the financial institution, employing techniques that help customers detect when a transaction is risky, use that information to try to do the speed bump, and then just deny the transaction. I think I've seen the willingness on more and more financial institutions to just put that denial in place if they think that the transaction is truly risky. And if a customer really, really, really wants to do the transaction, they can find some other payment rail on someone else's dime and commit it if they want to. I think the thing about real-time payments is no real-time payment will scale without fraud protection. Credit cards and debit cards are scaled because they have very good fraud protection. Zelle didn't scale until Zelle figured out fraud protection and scam protection. And all the mechanics. It's largely invisible to a customer. It's largely taken on by the banks and the network. But that was the key to getting that to scale. And I think any payment method that wants to be real time only scales when it figures out fraud protection. That fraud protection is either figured out by the network itself, as Zelle and the credit card networks did, or it's figured out by the financial institutions in terms of how they score the transactions and how they work to put in place the protections to stop a consumer from making a transaction they think is risky.
Yeah, so sounds like protection is must to have in order to really grow real-time payments successfully. And Ted, I know you've been working kind of with us on some project really to focus on like switching from the batch-based protection to real-time payment kind of protection. And do you kind of recognize the same similar concept of adding friction is healthy here and near real time and can be a way to support this?
Well, absolutely. And I'm gonna have a little Tedism here. I'm gonna say friction is the F word in here. Fraud fighters do not introduce friction any more than people who put a lock on your car's ignition introduce friction. We are protecting the people whose their property, their things. You have a lock on your door. So we fraud fighters don't do friction. That's something that marketing people grabbed on to try to tell us not to do things. We do appropriate protection. And so I love the idea here of that we give the customers what they need, not what they've been told they want. And so they're told, hey, would you like instant payments? Sure, that sounds great. Would you like that same instant payment, but no, you'll never get your money back if you do something accidentally? Oh, well, no, I don't want that. So I think we should be selling them on the fact that we want to give them appropriate protection that is meeting their needs. And so I would call it throttling your payments. Introduce appropriate protection and based on, you can use that with your fraud rules and your logic or the different ways that you move money. But that's certainly something that we've tried to approach. We want to look at the event holistically and say, based upon what's going on here, oh, this one looks beautiful, I'm sending it out right away. And this one looks a little I'm a little uncomfortable with it. I'm gonna slow this one down an hour, a day, or two, so that we have time to look at it, maybe contact the customer. But that level of protection, I think, is what customers and the regulators really want from us, and not just move the money as freaking quick as we can.
Yeah, I like what you're talking about, is equating to having like traffic lanes and putting traffic into different lanes based on their risk profiles and adding some speed bumps into a slower lane to make sure really got them protected. You can't drive so fast that you're too risky in this case. So love that concept. Okay, let's move on to the next topic, and is again coming back to the topic of AI, and we're now looking at more tools than traditionally we had. Kind of a machine learning is very kind of a common concept a few years back, focusing on detection part, and now we are seeing a new kind of ROI. We're leveraging AI. A lot of that aspects being focusing on review, investigation, and workflow. So is that a new trend? And how have you seen this adoption in the industry? So maybe I'll start with Brian. And at the strategic level, do you see the concept of AI co-pilot being widely adopted? And what leaders are doing here? Yeah.
Yeah, I think we're seeing the technology, the most recent releases, the technology is probably there to at least replace an experienced investigator. It was I think in early AI, as well, it can help the investigator. It can pull the data together. It can maybe help with quality control. It can help sort of proofread an investigator's report. Maybe get it written more clearly. So this idea that sort of AI was maybe more supporting the investigator with the old the old AI all of a year ago or something. I just last week had a call with a couple of researchers that took the latest version of the models from Claude and Gemini, fed it some pretty complex fraud investigations using disguised data, right? Because it's all in the public. And they were astounded at just how good these two models were at doing the work that a seasoned investigator would also do. So I think the technology has arrived or is imminent in terms of arriving. So the capabilities there, and I think the question now is how do you get that into a company so they can leverage it? Obviously, data privacy has to be taken care of. Quality controlling the AI's results has to be taken care of. These are not things that you can afford to screw up, but I think the technology has arrived a lot quicker than we think it would, and I think it's an awesome use case for making investigations more consistent, more accurate, and for dealing with some of the spikes that happen in an attack. Obviously, when you automate an investigation, you're able to scale it really quickly. So I think it's technology largely there, and now it's, well, how do we get organizations to leverage it? And there are very real hurdles to overcome there.
I definitely can resonate. There's a lot of excitement about latest development of AI technology, and on the other hand, we are worried about the guardrails and the controls. In particular, recently we saw the news that the director of Meta's AI research, leveraging OpenClaw, had her inbox entirely deleted. Right, so that's an example kind of case. We're all scared about what could happen when we have things uncontrolled. So, Ted, from an organization perspective, when you're looking at these newer tools, how have you been thinking about the constraints and guardrails and governance models here?
Yeah, I mean, I will tell you, I think that if there's anything in banking and AI that is exciting right now, it's exactly what we're talking about here. It's taking our operational processes and putting them on steroids, because this is what AI was made for. And the great thing about it is that every company right now is looking for small proof of concept, proof of viability moments. And boy, you're working your fraud alerts is the perfect environment for that, because replicable, readily, hugely documented processes, data sources are known. It's talk about an AI dream. I can train the model really, really well. And the only thing I got to do is to make sure that it doesn't go rogue on me and that the data is not going out to the cloud and where it causes havoc. But I can apply it so that it's only working on one queue, one reps queue, and then two, then three, and test it. So it's super scalable. It has the ability to take the yucky part of their job out and let them actually do the cool part, which is doing fraud, making a decision about it, is this fraud or not. So you get all the benefits from AI without a lot of the overhead. And I think the compliance piece of it and the model risk management, because you're doing it as a proof of concept, those type of environments are very well defined. And I think the AI tools are capable of protecting the data appropriately for it.
Yeah, I like your concept of, for example, the queues and concept, so that you can start putting some containers around it. So you can gradually increase the container, but at least you have a phased approach of exploring in a safe manner and get the better kind of ROI of AI. Now, let's move on to our last, maybe favorite topic of ROI. We're being kind of asked every single day of the ROI from the leadership perspective, having bigger pictures, right? And we used to talk a lot about fraud loss. And today it seems that the metrics goes much broader beyond. That's why we call it the modern success scorecard. It's pretty comprehensive and containing kind of multiple aspects of For example, we talk about the friction and to legitimate users and talking about the growth metrics. So from a strategic level, David, what would you suggest and everyone to consider that the modern scorecard should look like?
So you're exactly right. Everything has more and more fraud execs no longer manage losses. They manage their own P&L, right? They're managing losses and expenses. And oftentimes the expense line has more pressure than the loss line. And this is where a lot of the folks that we talk with are looking at investment in AI tools to help to show more productivity. Think of it as building a super agent, right? Ted said, get rid of the yucky part of their job, let them focus on making a good decision. And that's kind of what fraud leaders are looking for. They're looking at the 80-20 today, which is 80% of the time compiling all your thoughts and different screens and different data sources, and 20% making a decision, is this fraud or not? They're looking to flip that. So 80% of the time is made or used making a good informed decision, but the heavy lifting and all the assembly only takes 20% because of using these AI tools as a multiplier, right? To let them do more with less. So back to what we said earlier, if the AI attacks begin that we think will happen, and they're starting to happen, instead of throwing an army of people at case management systems to try and work alerts, if we have really good co-pilots and alert assemblers, they won't need to hire anyone. And also, there's another piece in that scorecard, which is operational health. It is getting more and more difficult for fraud execs to keep people in the seats to work the alerts because of repetitiveness and burnout in that process. And they're looking at ways that, you can not only manage the losses, but also you've got your expenses under control, but at the same time, you're not chasing analysts because your attrition rates are far exceeding what they should be. So there's a little bit of a trifecta going on there, but I think people are starting to look at these co-pilots and these different solutions that can help augment what these agents are doing to make them, feel as if they're not working in a production shop.
I very much kind of echo what you talk about the operation metric and health. It seems also a bigger part of the scorecard nowadays on top of fraud metrics. Brian, I remember we talk about a lot on this topic, and you certainly see this coming up as a major also considering factor as well. And can you elaborate on this aspect and also maybe generally and comment more on the modern scorecard?
Yeah, so just to build on David's points, I think look, as a fraud leader, it's hard to get the money you need to upgrade the capabilities, right? There's usually never met a fraud leader that didn't feel as though their program was underinvested, and I think you can only get so far justifying the investments on fraud losses. Bring in operational expense, you get a little further. The biggest bucket that I've found, though, is probably around going after Ted's F word, the friction in the process and the incremental benefit of another new account, or the incremental benefit of saving an account that gets mad, by a false positive and defects, is oftentimes the easiest business case to make, because those economics are pretty good from incremental business. So I think that the way to get after those economics is to embrace a scorecard that includes your fraud metrics, your organizational health metrics, like David suggested, operational expense, and customer friction from false positives on any transactions. And there is a relationship between false positives and defection, usually silent defection. They rarely cut up their card and walk away. They just decrease their spending. That's measurable. So a reduction in false positives should lead to better engagement. A little harder to measure on the new account side, right? Because you don't really know what your false positives are, but you can look at your funnel. You can look at the dropout rates in that new account funnel and what your fraud rules are doing maybe versus a competitor's, and try to get an idea of, if you were to upgrade the capabilities in the new account origination process, how many more can make it through, make a business case that way. So I think lots of good reasons to sort of embrace the broader scorecard. I think maybe the most compelling of which is trying to make a better argument for how to get the investment that you need.
Yeah, so like what you talk about, like a funnel approach, and also how to think about kind of from the fraud team perspective, supporting the entire organization from that level of angle. And Ted, what you're seeing kind of for you, and do you seeing the more pressure from the kind of executive level for the fraud teams and AML teams to be part of that equation for the overall organization success and the growth?
Yeah, I mean, absolutely. Though I go back to the old analogy. I think we've all sat through the building of dashboards and scorecards, and it kinds up being 300 measures, and nobody's looking at 97% of them. So when it comes to the fraud world, everybody wants everything. But when it really comes down to what's my acquisition rate and how's fraud impacting it, what's my operation efficiency for fraud? So what's the impact on expenses? What are my losses? Am I bleeding out the eyes or not? And what's my attrition rate caused by it? I mean, if I can get key measures that really address those at an executive gut level, something that really fits. So whether that's 4 measures, whether that's 8, I think if you can hit those drumbeats, I think, Brian, it seemed to align with the things you were talking, David, the things you were talking about. That's what they care about. You're talking about marketing, you're talking about efficiency, you're talking about loss. And I think that's how they look at our world. And if we can speak to those well with good, solid measures, then I think we're well covered.
Thank you. And so I think that concludes about the 5 topics we talk about. And there's really a lot we covered. And maybe for the audience, let's have all kind of this one sentence takeaway across the topics we talk about today. And it's a breadth of topic of really talk about what we're talking about, the AI fraud, the AI defense part, the real-time payment, the fraud and the AML collaboration, and finally, the success metrics. So maybe starting with Brian, what would you to have the final kind of takeaway for the audiences today?
Takeaway for me is just around proactivity. I think you can't wait for the losses to show up. Actively benchmark yourself and point out your flaws before the fraudsters find them.
Thank you. And David?
I would say get a head start on your AI transformation strategy before your losses far exceed your transformation costs.
And what do you think, Ted?
Okay, and I would go with the AI theme on that one. Get in the weeds, do some POCs now. Push the limits of your MRM and your compliance teams. Make them uncomfortable. Do the right thing, but don't wait for them to get comfortable first before you do something.
Yeah, absolutely. It's interesting that we are now rapidly kind of into an era kind of changing almost every single day, right? With the new AI landscape, technology landscape, the complexity we are facing, and it's funny, like in a social media kind of a group chat, and when my husband sent a message, we were both in there. And the immediate next question is that the real one, real you, right? So we really facing the AI kind of the bot world and trying to deal with that. So from my perspective, I really think we are now having increased complexity, and we also have significant advanced technology. To be open-minded and be proactive, I pretty much echo what everybody talk about. So I think that concludes our panel discussion. We're ready to open questions and Q&As to the audiences.
Yeah, thanks, Yinglian, and thanks to our panel. That was a great discussion there. So for everyone, if you haven't yet submitted a question, please be sure to do so. We'll use the next 10 minutes, run through as many as we can here as time allows. Yinglian, if you just want to go to the Q&A slide. So the first question we have for our panel here is, from what you have seen, what are banks and credit unions focusing their initial AI use cases? Or where, excuse me.
So the first question is where banks and credit unions are leveraging the first like AI use cases. Anybody want to chime in here?
Perspective, I've seen where they're experimenting with some customer-facing applications. The fraud teams that we've spoke to are, back to Ted's point earlier, they're starting to experiment and consider the use of copilots. I think copilots are really good to help do the mundane tasks, and it does a really good job at gathering some information that can speed up the alert. From the AML side, I've spoke to institutions that are using it to aid their investigators in creation of SAR narratives, because those narratives usually are very intensive and they take a lot of time. And they want to bring the facts in again from the solution. They bring those facts in, it writes that narrative. And then at that point, the analyst is just proofreading it and kind of touching it up, which again saves a lot of time. I like the fact that they're experimenting, and again, going back to Ted's point, testing their compliance teams. That's what it's going to take. I mean, years ago when we started using probabilistic models, the modeling teams are running down the halls with their hair on fire, and it's no different today. It's just a different kind of model, a different kind of idea. And it's get out there and start testing and finding value. You will win some, you will lose some, but you have to keep trying.
Yeah, very much. And I want to echo. So we roll out a number of AI facilitated functions and to our customer base. And like David mentioned, definitely that the saw narrative, AI facility saw narrative generation is among one of the first, and I can reduce the time to summarize and generate saw by about 95%. So literally, you're taking a fraction of your time compared with the past. And also coming back to similar use AI generated alert summary. Same thing, very similar concept, and do the tedious work and the yucky part that requires tedious human to compile everything. That part can help significantly. We definitely also see an interesting area where we roll out the AI-based rule tuning. That's where requires a lot of tedious trial and error process before from analysts. That's also where we can see significantly increase ROI in terms of also reduce operational costs and increase definite detection quality as well.
Thanks, Yinglian. All right, guys, and thanks, David. So our next question here is, what governance structures or frameworks have you seen implemented to put guardrails around investigation policies, particularly given how capable LLM models have become?
I guess we want to avoid all the AI-based hallucination. That's kind of where a lot of the guardrails. And Ted, you talk about the kind of the container approach, and then maybe do you want to kind of also comment on that how that approach is going to generate impact in the work phase by phase?
Yeah, I think that's the only way you're going to be able to build the right guardrails for your organization. You need to come at it. You're collaborating with your compliance teams, your model risk management teams, and you're building the guardrails as you go along, building out your POC or POV or whatever it is that you're going to call it. So it's got to be a collaborative effort, but every effort needs a champion. And don't let the compliance people be the champions, because what is compliance goal? To comply, to do the thing that is safest. You want to be the one who's pushing them beyond their comfort level. So I think every group needs somebody a little bit of stretch in them, and I think in this case, your fraud or operations fraud teams are going to be able to achieve that.
Yeah. And I think for a company that is building out its AI governance, I think fraud investigations is actually a pretty safe initial use case to focus on. I mean, if you think about, say, a customer chatbot or something like that, a little more risky. So I think, in terms of, arguing why fraud investigation should be the first place, it's internal. It is, completely policeable because you have active investigators there that can check the work, and there's a tremendous cost saving benefit from it. And so I think as an initial sort of test pilot for a company's AI use case, AI pilots, LLM governance, I think it's the perfect place to start.
Cool, guys, thank you. Keeping with this very popular AI topic here, we have another AI related question. So AI-driven scams often result in all green transactions that look perfectly legitimate. If our AI guardrails are tuned for fairness, do we risk creating blind spots that sophisticated fraudsters can systematically exploit?
Yes. But that's why you want to start to look at not just the moment of the transaction. You want to look at a holistic thing. It's all about gathering as much data as you can so that you can spot the random abnormality. The bad guys are good, but they ain't perfect. So you want to spot that one weird outlier that you go, whoa, that does not seem to make sense. And that's why you need AI and machine learning sophisticated systems that can handle that type of data load and analysis load in real time.
Yeah. Yeah, I'll
Got
add to
it.
Ted's point. If it's all green, upgrade your transaction monitoring.
Yeah,
Yeah,
I want
got
to
it.
also echo that sometimes when you are protecting transaction, just looking at the transaction data alone might give you, we talk about data silos, because that's where the fraudsters target, and knowing you might have a narrow lens of just looking at that particular one in isolation. And but if we really focus on the topic of breaking data silo, have a consolidated like a data infrastructure, being able to look at the holistic lens of a customer's profile, then those outliers, like Ted mentioned, and became outliers when they're looking at in that holistic view, because otherwise they look legitimate when they're looking at in isolation. So I really want to focus on the concept. There's also the traditional like approach we talk about. Brian also mentioned unsupervised machine learning of looking at fraud rings and looking at customers and transactions and behaviors in a holistic manner, different type of data could be an effective way still. And despite this level of sophistication, attacks evolve. After all, they're not us. They can't entirely replicate us.
Got it, England. Thank you. All right, so next one we have here, what's your view of agentic commerce? How far are we and how will it change the fraud and compliance landscape?
Yes, I think. Oh, go ahead, David.
As I say, this was actually one of my top trends this year, and I think from a financial institution perspective, we're starting to face a dual authentication crisis. The traditional frameworks that we have, where we're assuming we're verifying humans on the other end, that assumption is no longer valid. And what we're seeing is it's going to shift the question from who is the customer to what AI capabilities are being employed. And then it's going to have the FIs are going to have to basically ask two things. First one is intent. Did the user or my customer authorize this agent? And then secondly is the integrity. Is the agent acting as designed or on behalf of the intent? Is it acting on behalf of the consumer as it is intended to do? As I look at this and I have more and more conversations with banks, networks, merchants on the merchant side, I think we're looking at authentication's most fundamental change since digital banking began. And that's just on the provisioning and using these things. And I think there's a secondary piece, which we have to look at merchants and merchant onboarding, because what happens when a bunch of fraudulent merchants are created just for the specific purpose of luring in these agentic agents that are set up by consumers? What if it's algorithmically manipulating those, and all of a sudden all the money's being spent with a fraudulent bot, and there's no good or service that's ever delivered? So there's a lot in this space that's starting to formulate, and there's a lot of questions, but it is a bit of an arms race on how to figure this out and where the ability to provision and or revoke provisions are going to reside within the FIs.
All right,
Just to build on David's point, I think it's agentic transactions that we're really thinking about hard here. Commerce, shopping, discovery, all that stuff, great, right? It'll take off. Agentic transactions have a ways to go. The liability shift is going to be the limiting factor, and I am waiting for the big companies with a vested interest here to sort of pave the way. Agentic transactions fairly concentrated. It's going to be Google, Amazon, Shopify. They've got to take the first step and lay out the framework.
All right, thanks, guys. I think that's just about all the time that we have here today. Thank you to our panelists. That was an awesome discussion and great questions and answers. And thanks to all of our attendees for joining. We'll see you again next month, and stay in touch. Bye, guys.
Thanks, y'all.
Thank you.
Thank you, everyone.